Imagine peering into the mind of Warren Buffett, the Oracle of Omaha. His every move shapes markets and fortunes. He's built Berkshire Hathaway on timeless principles: invest in what you understand, seek companies with a durable edge, and hold for the long term. So, where is Buffett putting his money as we head into 2025? His choices reveal his outlook on the global economy. In this video, we'll break down Berkshire's latest filings and the top 3 stocks Buffett is buying aggressively, plus the logic behind each pick. Stick around to learn how Buffett thinks, not just what he buys. Let's dive in. First up, Apple, the crown jewel of Berkshire Hathaway's portfolio. It's not just the largest holding, but also the most influential, shaping the very character of Berkshire's investments in the modern era. To Buffett, Apple isn't just a tech company, it's a consumer powerhouse with an ecosystem that locks in users. The company's reach extends far beyond gadgets. It's woven into the daily lives of over 1 billion people worldwide. Once you're in, switching is tough. Your devices, data, and apps are all seamlessly connected, creating a moat that competitors struggle to cross. This integration means Apple customers rarely leave, and each new product only deepens that connection. Apple's brand loyalty is legendary. People don't just buy products, they buy into a lifestyle. The anticipation for each launch, the excitement of unboxing, and the sense of community among users are unmatched in the tech world. This translates into massive, predictable cash flow, which Buffett loves. Apple's ability to generate consistent profits, even in uncertain times, is a rare trait that sets it apart from most companies. Apple's financial strength allows for heavy R&D investment and, crucially, huge stock buybacks, boosting each share's value for long-term holders like Berkshire. These buybacks steadily increase Berkshire's ownership stake, even without buying more shares. Buffett admits he was late to tech, but Apple's brand power and customer loyalty made him go all in. He's often said that Apple is probably the best business he knows, and he's praised its ability to create products people truly love. It's now a core conviction, not a casual bet. Apple has become so central to Berkshire that it's hard to imagine the portfolio without it. He trusts Tim Cook's management, praising their rational, shareholder-friendly approach. Cook's steady leadership and focus on long-term value have only strengthened Buffett's confidence in the company's future. Apple's services, like the App Store and Apple Music, are growing fast, adding recurring high-margin revenue. These services are now a key pillar of Apple's business, providing stability and growth beyond hardware sales. This shift makes Apple less dependent on hardware and more of a platform monetizing its vast user base. As more people subscribe to Apple's services, the company's revenue becomes even more predictable and resilient. Buffett isn't expecting overnight gains. He's betting on Apple's fortress-like business, loyal customers, and clear path to future profits. He sees Apple as a company built to last, with defenses that few can challenge. For him, it's about owning a wonderful company for decades, not trading stocks. This long-term mindset is at the heart of Buffett's investment philosophy. Apple's scale fits Berkshire's need to deploy massive capital in high-quality businesses. Few companies are large and stable enough to absorb the billions Berkshire invests, and Apple is one of them. Even with regulatory risks, Apple's moat and brand strength offer protection. The company's reputation and customer trust help it weather storms that might sink lesser firms. Future growth areas, like health tech and augmented reality, add optionality. Apple's innovation pipeline means there's always potential for new, game-changing products and services. Apple is the modern-day Buffett stock, cash-rich, dominant, and nearly impossible to displace. Its financial firepower and brand equity make it a rare breed in today's market. It's less a stock, more a cornerstone of his investment philosophy. Apple represents the kind of business Buffett dreams of owning. Durable, beloved, and built for the long haul. That's why Apple remains Buffett's biggest and boldest bet. It's a testament to his willingness to adapt and recognize greatness, even outside his traditional comfort zone. For investors, Apple is a masterclass in long-term, conviction-driven investing, showing that sometimes the best opportunities come from embracing change and holding on for the ride. Next, we move from tech to energy. Buffett's bold bet on Occidental Petroleum. This investment marks a significant pivot, highlighting how Berkshire Hathaway isn't just about tech giants or consumer brands, but also about the backbone of the American economy: energy. Occidental Petroleum, or OXY, is at the heart of this strategy. Why energy, and why now? Buffett believes oil and gas will remain essential for decades, even as renewables grow. While the world is rapidly investing in solar, wind, and other green technologies, the transition won't happen overnight. Oil and gas are still critical for transportation, manufacturing, and heating, core pillars of modern life. He's betting on American energy independence and the enduring need for fossil fuels in our infrastructure and economy. The U.S. is striving to reduce reliance on foreign oil, and companies like Occidental are central to that mission, ensuring stable domestic supply. Occidental stands out for its leadership, especially CEO Vicki Hollub, and its top-tier assets in the Permian Basin, one of the world's most productive oil fields. Hollub's vision and operational expertise have helped OXY weather industry downturns and emerge stronger. Buffett's relationship with Occidental began in 2019, when Berkshire helped finance its Anadarko acquisition, gaining preferred stock and warrants. This move gave Berkshire a front-row seat to Occidental's transformation and growth. Since then, he's been buying common stock relentlessly, now owning over 25%, with approval to go up to 50%. This level of ownership is rare for Berkshire and signals deep conviction in Occidental's future. This isn't passive, it's a strategic partnership. Buffett and Hollub are aligned on long-term goals, with Berkshire's support providing stability and confidence to Occidental's management and investors. Occidental's operational efficiency means it can stay profitable even when oil prices dip, providing Buffett with a margin of safety. The company's ability to control costs and adapt to market swings is a key reason for Berkshire's confidence. The company generates strong free cash flow, used to pay down debt, boost dividends, and buy back shares, all music to Buffett's ears. This disciplined capital allocation is a hallmark of companies Buffett loves. The investment also hedges against inflation, as rising energy prices benefit Berkshire's portfolio. In times of economic uncertainty, energy stocks can provide a buffer against the eroding power of cash. Occidental is a leader in carbon capture technology, positioning itself for a carbon-conscious future and adding long-term viability. Their investments in direct air capture and carbon sequestration could make OXY a pioneer in the next era of energy. Buffett loves businesses the world can't live without. Energy is at the top of that list. As cities grow and economies expand, the demand for reliable energy only increases. His aggressive buying signals he sees the market undervaluing Occidental's long-term prospects. Buffett is known for spotting value where others see risk, and OXY fits that mold perfectly. The warrants Berkshire holds offer huge upside if the stock performs. These financial instruments give Berkshire the right to buy more shares at a set price, amplifying potential gains if Occidental's value rises. This deal structure gives Buffett both safety and potential for big gains. It's a classic example of how he manages risk while positioning for reward. For Buffett, this isn't a short-term oil trade, it's a long-term bet on a well-managed, essential American company. He's looking decades ahead, not just at the next quarter's results. It's a classic Buffett move, pragmatic, value-driven, and contrarian. While many investors chase trends, Buffett seeks out enduring value, even if it means going against the crowd. Occidental is a play on energy's future, strong management, and a unique deal advantage. It's a company with the assets, leadership, and vision to thrive in a changing world. Even in his 90s, Buffett is making bold, foundational bets. His willingness to commit capital to transformative deals shows his enduring optimism and strategic thinking. That's why Occidental is a core holding for Berkshire heading into 2025. It's not just an energy play, it's a testament to Buffett's belief in American industry, innovation, and the power of patient investing. Finally, we turn to the backbone of the U.S. economy, banking, a sector that quietly powers the ambitions of millions and underpins the nation's prosperity. When it comes to banks, Warren Buffett's top pick is clear: Bank of America. It's not just another holding for Berkshire Hathaway, it's one of the largest, a testament to Buffett's deep conviction in the enduring strength and profitability of the American financial system. Bank of America's massive scale and broad diversification, spanning consumer banking, wealth management, and corporate banking, help generate stable, predictable earnings year after year, even in turbulent times. Under CEO Brian Moynihan, the bank underwent a dramatic transformation after the 2008 financial crisis, refocusing on its core strengths and embracing disciplined, sustainable growth, qualities that Buffett values above all. Buffett's trust in Moynihan's steady stewardship is a key reason he's comfortable investing in billions. Leadership matters, especially when navigating complex financial waters. Another major draw, the bank's sensitivity to interest rates. As rates rise, Bank of America's net interest income grows, directly boosting its bottom line. Higher rates mean swelling profits, which in turn translate to stronger returns for shareholders, something Berkshire Hathaway is always looking for. Bank of America is also committed to returning capital to shareholders through robust dividends and aggressive share buybacks, which quietly increase Berkshire's stake without any extra investment. Buffett is a big fan of buybacks, especially when the stock trades below its intrinsic value. It's a way to build wealth over time, rewarding patient investors. Large banks like Buffett are the circulatory system of the economy, facilitating everything from home loans for families to financing the growth of major corporations. Their reach is vast and their impact enormous. Thanks to post-crisis regulations, banks like Bank of America are now safer than ever, boasting fortress-like balance sheets and a conservative approach to risk that helps weather economic storms. Buffett's initial stake in Buffett came from a bold crisis-era deal, preferred stock with high dividends and warrants for common shares. That move alone netted Berkshire billions, proving the value of acting when others hesitate. He saw opportunity where others saw only fear, and his trademark patience paid off handsomely as the bank recovered and thrived. Even today, Buffett believes Bank of America remains undervalued compared to its long-term potential, offering a rare margin of safety in a sometimes frothy market. While flashy fintech startups often grab headlines, Buffett prefers the stability, scale, and regulatory advantages of established banks like Buffett, which have stood the test of time. For Buffett, boring is beautiful. Predictable cash flow, a powerful brand, and a vast, loyal customer base are the ingredients for compounding wealth. Bank of America's nationwide reach and cutting-edge digital presence create a sticky, low-cost deposit base, giving it a durable competitive edge in a rapidly changing world. All the classic Buffett ingredients are here. An essential industry, trusted management, shareholder-friendly policies, and a built-in margin of safety that protects against downside risk. In the end, it's a straightforward, powerful bet on America's financial future. A future that Buffett believes will continue to reward those who invest with discipline and patience. Sometimes the best opportunities aren't flashy or complicated. They're hiding in plain sight, waiting for someone with vision to recognize their value. That's why Bank of America remains a cornerstone of Berkshire's portfolio, a steady, reliable engine for long-term growth. There you have it. Buffett's playbook for 2025. Apple, Occidental Petroleum, and Bank of America. Each pick reveals where the world's greatest investor sees value and long-term growth. Remember, this video is for information and entertainment only, not financial advice. Always do your own research and consult a professional before investing. Which of these stocks do you find most compelling? Let us know in the comments. If you enjoyed this breakdown, subscribe for more deep dives into legendary investors. Thanks for watching.